Welcome everyone. How we doing? Hope you had a good weekend. A good weekend for me. Just worked all weekend. Had crazy weather. Sunny, snow, rain, a little bit of everything. It was good. What about all of you? How's your weekend? Don't you love when one weekend ends and you're already ready for the next? Yeah, in Oregon, we're kind of in that, we were like 65 last week and then we snowed yesterday. So we're kind of in that pretend spring for now. Thanks. How we doing? Welcome. We'll give it a few minutes, let some people show up, and then we'll get to it. Yeah, it's crazy. I haven't seen the whole Midwest is still in a drought, and Oregon's actually pulling out of their drought for the first time in a decade. Even New York, I mean, it's had a couple of crazy storms this winter, but none of the national news type of storms it usually gets. Morning from the other side of the world. Oh man, Scotty, that's crazy. The 40s in Florida, that's when the iguanas start falling out of the trees and stuff, right? Yeah, I've actually never been to Florida. Want to get down there and do some fishing one of these days, though. Who knows? I think that was as far as the market pumping this week, who knows? I mean, that was some pretty good data. This is NQ, so we can talk about it for just a second while we wait for other people. These are just the futures on tech, so very similar to QQQ, except for a much bigger number. But we've been talking ranges, talking support, talking resistance, talking all that stuff in all my lectures lately. QQQ was in a there. Well, again, this is NQ, but basically the same thing. QQQ is, while trending up technically, no denying bigger picture. Obviously, trend is up. We spent, few weeks, I don't know how many days that is, probably 20 days, maybe the better part of a month, in a bit of a range. And last week was our breakout. This counts as breakout to me. So we are in breakout mode. Definitely dip buying. We'll talk this on SPY and QQQ here in just a minute. We're going to start with them. But dip buying all the way down to, this is obviously, the futures, but 18,150. Easy buys all the way on it. We got, all those EMAs have started curling up again. We had seen a lot of sideways movement out of some of those big tech names. A lot of the EMAs, well, and we're going to cover that later this week, but a lot of EMAs flattening, SMAs flattening. And last week we started to see that big kink up in them to see if we're going to have some continued momentum. But pretty good data last week. That's what that's what I wanted to see. I hope that's what the Fed wants to see, and so hopefully keep riding that train into some of the data later in March here. First winner in Florida, nice. Oh, there you go, real estate rhino. Yeah, I do good amount of fly fishing. I've always wanted to come down there and check some flies at some of those big saltwater fish you guys got. I fished Belize and Colombia, but never done the Florida thing. Well, welcome everybody. Hope we're all doing good. Hope we had an awesome weekend. Man, I'd like to live in Belize for a little bit. We actually have some friends who just bought land down there that are going to set up a little guide service. I think I'm going to try to legal or weasel my way into some work down there. Maybe we'll see if it works out. Columbia, nah, but Miss Rivers' brother, he lives down there. They got the good bananas. Yeah, that's where I went, Ricky. We stayed out there for 10 or 15 days. Okay, I'm working on this. Shit, man, wish I could help you. I just want to visit Florida. I'm too poor to buy anything in Florida. Oh yeah, we'll be charting some tea. 1 second. And okay, let's get rolling. Welcome everybody. Dirty River, happy to have you here. Sunday night market scan. Got a few things I'm going to watch. We're obviously going to start with SPY and QQQ, IWM as well, because that's what a lot of people trade. And so definitely want to talk about those. And plus, they just kind of give you that broader idea of what's going on in the market, and maybe some places that you do want to try to put your money right now, maybe some places you don't want to try to put your money right now. And so we're going to start with those. And then I just got a couple of names that I'm watching. We'll go over those. But hoping to have plenty of time and check out some things for all of you. I know, one of the great advantages of being in a Discord like this, one with people who actually trade, but two with actually some pretty dang good traders. We're lucky in the Discord world that we actually have some, very knowledgeable people in here, some very good traders. So I'm always happy to check out some trades from all of you. I know that people have hit nice off some of your ideas, not even necessarily my ideas, just something that people bring up in these, and then we look at them, and then, I typically forget, and then people hit real nice on them. So if you guys have anything you want to look at as we get towards the end, we can definitely talk about some of those trades as well. But like I said, Thanks for being here. And we will start with SPY. My favorite thing to trade, obviously. Maybe not everybody's favorite thing to trade, but SPY, uh, ripping. Love to see it. Don't even have to say SPY to 500 anymore. It done did it. But as with everything in the market, I mean, if as long as you're not looking at some terrible stocks, as with everything in the market, trend is obviously up. There has been shortable opportunities, of course, but most of them have been, the big drops that we've seen. This big drop was FOMC. This was the CPI or PPI, one of those, taking gap downs on those. Hard to trade. I shouldn't say hard to trade, but to catch the good short trades we've had lately, you've basically been having to risk the overnight trade on it. And there's, no matter how you add it up, swinging short has been, it's been a death wish. There's been days where obviously it can work for you, but as a whole, if you are in short positions, we're having a weak market day or it may even a ranged day where, ranged to downwards day, 9 times out of 10 for this last year and a half, closing out those shorts at end of day has obviously really been the move. So when we look at SPY, big picture, obviously trend is up. Even some of the sectors in SPY, the XLEs, the XLF, that, they've been on nice moves, but they haven't been getting nearly as much love. They're finally starting to get some love on them. We're definitely seeing some bounces in oil prices. Some of those names, I know a bunch of you guys were in trades on this, so we can look at it. Exxon was wildly range bound, for days right here, like no good trade here for me. And then finally took that breakout. As most of you guys know, I won't enter trades in the middle of a range or anything like that. So finally took that breakout on XOM. And so we're starting to see some money disperse into the market a little bit more. Obviously, big tech names still not a train you want to jump in front of, but I'm also treading a bit more lightly on the tech trade. We'll get a little bit more into that when we pull up QQQ, just because, you know, the a lot of names participated in the rally last year and into this year, but tech led the pack. I mean, you would have to be blind to not see the strength and the movement in tech for the last year and a half. And so now, as we see money kind of start to disperse out into some of those, the small caps and things like that, that is when we will start to see a bit less of that just extreme volatility, mostly to the upside in the tech trade, because the money will be dispersed. So there won't just be this huge amount of money pouring into tech. This, of course, does not mean in any way I'm bearish on it, nothing like that. It just means that we could see a slowdown in volatility in tech as the market breadth does a bit of expansion. But that brings us to SPY. Trend is up. Everything in SPY is strong. So again, we still want to be mostly focused in dip buying mode. That doesn't mean buy every red candle of the day or anything like that. But going forward on SPY, main things I'm going to look at are going to be things like these highs. This was a new all-time high with a pullback. This was a new all-time high with a pullback. So these are kind of, some downside targets. I do think that over, sometime over the next month, and it could be not for weeks, but I will not be surprised to eventually see us pull down to somewhere around this 500 maybe. We do have, always got to be careful talking about these because you don't want people being bearish just because of them. But we do have this nice gap where we took the really big gap up. I don't remember even which that one was now, PCE. One of the inflation data is we took that big gap up on it. So we do have that gap down there below us that, I won't be surprised to see us visit somewhere down into it over the next month or so. But for now, really just staying on the buy the dip mode. It's just worked too good. It's been too easy. You don't have any guessing involved. Something I do want to point out here, these are a couple of EMAs, we're going to have my EMA class later this week, so I'm going to talk about it. But this is just the 5 and the 13 EMA, which is something that I use very, very frequently on shorter time frames, 5s, 15 minutes. Crossovers on the 513 can be really, really deadly. And It's an older combination. Not a lot of people use it anymore. A lot of people have moved to like the 8 and the 16 or the 8, even the 8 and the 13. A lot of people have moved to that. Well, Tilio actually here, God, probably 2 months ago, uh, maybe even more than that, end of the year, even Thanksgiving time last year, pointed out, hey, that 513 it's doing very, very well on the daily time frame. And so that's the EMA I have here. And so those are kind of the levels that I've been watching. People always hear me say, don't try to like catch bottoms and stuff. A lot of the times, these last, until we had that big ripper on Friday, these last few days where we had kind of seen some selling and the day ended up turning green, we've been in voice chat a lot. And this is what I've been watching as kind of if we're having a pullback in the market and we're around this 5 EMA, it's provided a very good trade to get long with a nice, tight stop below it. It's never like it hasn't got too blown out yet. And when it does, we tend to get right back over it. So 5 EMA has been really, really solid. And obviously, that's just saying over the last 5 days, because that's what this EMA will be based on is five, whatever period you're on day, 5 minute, 15 minute. So any of these dip buys to this five have been just absolute print fest. It's been pretty ridiculous. So I've been really loving it. Again, both of those time frames are short, the 5 and the 13. They're they're short period EMAs. So they're going to pick up on volatility a little bit quicker. But if we really zoom out and kind of look at this, I mean, since this cross, back here, that this is that note where the just ripper started, up God almost $100 in a few months. This cross, and it just never looked back. It had an attempted cross and was bought over it with force instantly, 2 months later. But been a very, very strong EMA. So that brings us into SPY and how it's trading right now, and how can we trade it? And obviously, like I just said, dip buys to this 5 EMA have been really, really good. Another one that I'll really be watching, and I actually mentioned this on Trade Floor yesterday or day before. Somebody asked me what I had my eyes on. I would love to see a pullback to this previous all-time high. For me, that's just going to offer a really, really awesome risk reward trade. If we do get a pullback or some sort of ranging on a Monday, like is pretty common, well, you never know, but more often than not, Mondays are pretty rangy. So if we can get a pullback either to this previous all-time high and not, the 481 that we had, the one 5 days ago, we're setting them all the time, but the one about 5 days ago, when this new daily candle opens, this 5 EMA is obviously going to bounce up. So I'm going to imagine that the 5 EMA on the daily is going to line up very, very close to this previous high when we do get it printing. So it's going to offer an excellent risk reward trade to try to be long for the bounce right there. As far as levels, it gets a little tricky when you're just trading at all-time highs. So what I like to do is look for any places and go to, hourly, 4 hours, some of those longer time frames. Look for anywhere that the market kind of faltered for a second. And think of those as your levels. Well, the market basically did not skip a beat on Friday. This market screamed long me, long every pullback, long every red candle, even though there's like three of them all day until the end. This market screamed long me. So what I like to do in a situation like this is sometimes I'll use a fib. So and some sort of fib, I want the fib retracement. I want to look for a pullback. And so how I'm going to do that is I'm just going to go from the lowest low up to the highest high from that previous day. And so we see as we get back to that 50 and that 61.8 fib, that is going to end up lining up right around our dip buy. So really any dip down to that area is where I will be looking to get long. Not even super tight stops. We know we're going to have some support, So, and even support here, support on that 5 EMA. We're going to have all kinds of support for a couple of bucks below us. So pretty safe dip buy here, in my opinion. And of course, I'm going to stay looking to buy the dip on SPY. So that's pretty much how I'll be trading it going into tomorrow. Obviously, the previous high of day, previous low of day, which are going to be a nice big range for us, as well as those pre-market highs will kind of be the crucial levels going into it. QQQ, kind of in, a similar situation. As we talked with NQ right at the beginning, we'll do this again. QQQ was trending up, however, range bound. We were pushing, setting highs, setting lows, setting highs, pulling back. So we were a little bit range bound on this. We have now broken out. We had a strong day out of QQQ. I mean, I think it was even a stronger day than SPY. So we had a very strong day out of QQQ. And we now know that we're in breakout mode. So yet again, we basically have to do the same thing. Go into those hourly charts. We would look typically for a pullback, anywhere the market faltered. Market didn't falter, it just ran all day. So we basically stay long until we get back down to the top of this range. Even right here is where you can start to think we're going to pull that all the way back down, 440, 430, 922. But we're looking to buy dips all the way back down to the top of that consolidation area. Obviously, if we have some little tiny pullback 445, I'm not saying get full on long there. You want some retrace to look to try to get long, and catch the bounce with the tighter stop, make your risk reward substantially better. So really, tech and SPY basically sitting right about the same for me, in my opinion, right now. Again, 513 EMA has been good on tech, slightly not quite as good as SPY. It has had, tech has had some pullbacks that were a little bit more substantial and aggressive than SPY has had. And so 5 and 13 has been really good, not nearly as good as SPY, where SPY has just basically been riding it. But definitely another EMA set that you can have your eyes on, going into those things. And as most people know, I get asked it all the time, how do I start my trading day? And I do this. Exactly what we are doing right now is what I do every morning before I take any trade. I go and look at the things that I want to trade, your Apples, Amazons, which we're going to get into, SPY, QQQ, and I look at them on the longer time frames. I look at those dailies, I look at those hourlies, and start saying, do I want to be short? Do I want to be long? Where do I, if I am short, where do I want to switch long? If I'm long, where do I want to switch short? And you are mostly going to find that information on these longer time frames. And so I think, again, it's been easy. You don't have to be a genius to be a dip buyer right now. Everything's strong. Look for that strength and follow the strength. And so the final one ETF that I want to talk about tonight is IWM. I trade it a lot. I know a lot of people don't like to trade it because it is a little bit slower moving. I wish people would trade it more, same rewards as SPY and QQQ for cheaper with less volatility. I mean, it's pretty great. But the main thing I want to point out here, and we'll remove these. These are actually, I think, from our last class, but we'll kind of remove those and talk about them here again in a second. The main thing that I want to point out is IWM was range bound for almost 2 years, and last week was our first weekly close out of that big range that we've had that started being set back in early 2022, and lasted all of 2023. We are finally seeing it in breakout mode, and this is for anybody who doesn't know. IWM is it's the small caps, which are heavily affected by high rates. Those companies need a bunch of debt to function well and to expand and become bigger companies. And so seeing IWM in breakout mode is like the leading thing that people should take note of to understand that breadth in the market is expanding. People are starting to feel comfortable putting money elsewhere. And so for us, finally seeing this breakout, it's great. It's going to provide some good trades for us. Obviously, the levels that we're most concerned with are going to be the 2 weeks that we attempted breakout and ultimately ended up failing it. Big moves that failed it, and then a nice move outside that ultimately at the end failed it. So for me, going into these shorter time frames, this is basically what I'm concerned with. If we are above this 204.83 all the way up to 205.50, I am a very confident dip buyer on IWM. It offers a great stop. You're risking about $1. Upside, if we go out here, I'm not saying it's going to happen in a day or anything as it's IWM, but we just want to look at some of these previous highs. And if you're in this one on the long trade, you obviously want to be trimming it on the way up, but we're looking for, potentially an $8 move to the upside eventually just to get back to these previous highs from, early 2022 and to 2021 area. So nice dip by to there. However, markets, I always describe it as markets don't like to set new highs and markets don't like to set new lows. So they are often met with some sort of a pullback. So if we do end up giving up this little zone that we had that we're, watching from these previous attempted breaks, there will be a nice short opportunity, whether it's down to some EMAs or if we ultimately want to come down and test this breakout and say, is the small cap market really ready to break out? Because, theoretically, it should not be ready to break out yet. So I won't be entirely surprised to see a retest down to here. Obviously, shortable down to there. However, around the top of here, you likely want to be looking to switch long. You might get blown out of the water, but the market will likely take a bounce if we pull all the way back down to this top of this range. Obviously, if we get some sticky inflation data, or rate cut news that we didn't want, this is the sector that will be affected likely the most. So if you're wrong, admit you're wrong and get out of that trade. Don't just hold on. But I think IWM at a very tradable place for either longs out of this zone, shorts down to the top of the range, or if you just want to ride it out all the way down to the top of the range and risk the longs down there, I think there's three very, very good ways to trade the small cap market right now. And so that's all I got for IWM. Hopefully everybody got that. Next thing I'm watching, and it's something that I think everybody should be watching, is Apple. We talked Apple in class last week during trending markets and ranging markets. We had two trade plans going into it. We were talking it on this day. We said you want to watch it all the way down to 180. If it's going to break 180, you can try the bounce on it. And if we zoom into the longer time frame, we were watching it coming into 180, and then this is Friday. We said if we can reclaim 180 and you want to try the bounce on it, then great, try that. If not, you want to try to short it below 180. And if you really want to wait for that safer entry, wait for this 179.26 and take the short entry there. And so we can see on this day, it ultimately gave us too many good entries. We could have shorted this breakdown. We could have shorted this bounce. We could have shorted this big old wick. This was like, I actually watched this one. This one actually gave you enough time to attempt to short it up here. Or if you waited, you had 3 candles to attempt the entry here. Then we talked, and we'll go back to the longer time frame. Then we talked, where will Apple go down to? And we were basically watching these lows saying we knew that this had provided breakouts, breakdowns. If you get down to this 177.75 area, all the way up to 178, that's likely where you want to exit your shorts. And as we can see on the day, they did try to break us down a little bit, but we ultimately took that bounce exactly where we would have expected. And they ran us back to 180. So now we are in virtually the exact same situation that we were in before. However, we are going to be even tighter in on this trend than we ever got. So for me, Apple is one that is offering enough volatility, more volatility than Apple typically provides. It's offering enough volatility right now to be tradable, short and long. Most days have been, at some point have been giving money. Obviously, the 180 bounce has worked very, very well, and the trend line short as well has worked very, very good also. And so Apple can go either way, and we have the exact same trade plan. If we are able to break over 180 and hold it and get over this trend, then obviously you want to be looking long for those bounces all the way up 182.50 and ultimately 185. You don't want to be shooting for the stars on this thing, and especially because we know most breakouts fail. So if this breaks out, don't necessarily be getting super long on that first, attempted breakout. The retest if we can get a break and get a retest of 180 at the trend, now that provides a really great long entry, minimal risk. On the other side, if we're coming into the day, we're looking like we're going to reject that 180 again. We're still well below the trend. Same targets downside, all the way down to that 177.50 area. If we give that up, you can obviously start to look at some of these previous lows because we had big movement here with not a lot of freezing up, so we can start to look down to that 175 zone on Apple. So for me, super tradable right now. Plenty of volatility intraday. I mean, when you see Apple making moves like this and giving you nice bounces, you know, I love trading things like Apple when they are around a strike price. Without getting too technical, you can really take advantage of the Greeks on something like this, where if you are trading Apple and say you're getting long, break over this 179.26. We're just using a random example. And you get this move from out of the money to in the money quickly, it pays extremely well. So when Apple is doing something like this, I love to trade it. Same as this, you can get some 180 puts at 180.20 and run them in the money. Your delta is going to increase by 30% just on this 50-cent drop. So you can make very, very good money on relatively affordable contracts and small moves when we're trading around these strike prices. So it offers a really, really good trade. You know, it offers a really, really good trade. Short or long, whatever you prefer. There's no, when we look at big picture Apple, it's weak. There's no denying it's weak. However, you always have to also think um, it's Apple. So, you always want to be a little bit, cautious as, cautious being too short on Apple. Of course, some shorts have paid, but I think, it's offering very, very tradable moves right now. So Apple 180 trend, super simple, very, very easy trade to manage for anybody. So definitely have your eyes on that one. Next one I'm watching, Amazon. Um, oh, this is for me talking about it with my buddy the other day. We'll just clear all of this. So Amazon, uh, obviously, no surprise here. Tech, very similar to that QQQ chart, was very range bound. Was working on, wanted this breakout, and now has had 2 days of closes outside of that breakout. I'm hoping that I did not miss the boat on this one. And that entry, very well could have ended up being the small little dip we got on Friday on it. But very dip viable down to that 175.50. Tight stops below there. If we get back into the range, we continue to treat it like range trading, try to short it down to these lows and catch these bounces back up to these highs. So continue to treat it like a range. As far as upside from here, that's where Amazon gets to be pretty interesting. We have to go back to the end of 2021 to find any sort of levels because it is now approaching those, all-time highs. One of the big tech names that hasn't got there quite yet. And we have to go back and look at these levels. The main thing that I have been, watching myself has kind of been this little bit of consolidation that we had at that end of 2021. So what I did when I was talking about this with the buddy of mine, I just drew this box here and then I extended it. Let's see, we want to go to, I extended it to basically now, because I wanted to see, this is the last line of defense for bears, even though the bears are mostly dead. Kind of the last line of defense for those bears, and then we really just have to look to these highs. Amazon has spent 10 15 days of its life above 180. Of course, back when this was going on, it was trading $3,500 a share or something like that. This was pre-split. But it spent 10 15 days of its life up here, so there's just not a lot of data. So this is that last bit of consolidation we had before we ultimately broke down. So then you just want to come over to here and say, okay, this is kind of where we want to be looking to trade it. We want to buy the dips down to here. And if you're long Amazon, as we start pushing up 180, you're really, really risking it. You want some confirmation over that 180. I'm not saying short it at 180, but you want to start to be cautious there. Then as we get up to this 185.50 all the way up to 188, those are those previous highs. Yet again, you want to start to be cautious. All-time highs can kind of go one of two ways when you start trading near them. You can either have a real big explosion over the top of them, or you can take a big old smackdown. Something that you want to consider is the long-term people on Amazon, people who were getting long end of 2021 on Amazon. Granted, most of them sold and repositioned. However, there is still a lot of people and a lot of the major ETFs that, like SPY, things like that, QQQ, that are required to average up and down to keep the percentage similar in the ETF. There's a lot of people trapped in Amazon shares above that 180, 185 area. So they might take their out when it presents itself. So I'm looking upside on Amazon without a doubt. Looking for any dips to buy with those tight stops. And then if we get back into the range, great. We can try to short it down to the bottom, short it down to some EMAs. But for me, I'm looking for Amazon to, over this next couple of few weeks, really make that push up to those all-time highs. I think it's going to provide a nice, simple trade that if you buy some time on some of these dips, widen out those stops, $3-4 down to some EMAs, and you will likely end up catching a really nice move on Amazon here sooner than later. Like I said, I'm hoping that this was not the dip. We got very, very close to those lows from that, back in 2021. I'm hoping that this little tiny wicks and pullback that we had at that 176 wasn't the dip before it really bursts. But got to wait and see. But for me, Amazon, again, nice and tradable. Long right here, short down below it. Obviously, if you're shorting it, you want to be taking those gains when they're shown. Otherwise, stay pretty bullish on that one. And so final tech name I'm going to talk about tonight, Google. Pretty ugly chart now, on the back of some bad news that it had, not a very, happy welcome to their AI stuff they tried to put out. So investors definitely feeling a little sketched out by Google right now. However, as we talk about in a lot of these lectures, man, that 3-day rule, after bad news, after earnings, after those kinds of things, more often than not, you're better off giving a stock a few days to decide what it wants to do. And so that's where I am on Google right now. We've now had a few days since the news has come out. And so I think we start to look to trade this thing. And chart looks bad. Overall, well, shorter trend is down. Overall trend still very up. It's another one that I'm wondering if this 135 test was kind of the entry. We'll see if it plays out this way. Obviously, this was the previous breakout that we had. Gave that retest, really pushed, and then fell pretty heavy going into those earnings. This was some more, I think, there's the big earnings gap. Tried to buy it up, but ultimately I found ourselves below the earnings drop. So that's where I start to look. 135, nice dip buy. However, this low after earnings, 136.60, one all the way down to 136 area, might be providing another pretty nice dip buy. The risk on that one is that you're going to have to widen that stop out likely to this trend. So your stop is a bit wider. That's why I'm saying the 135 was likely the preferred entry, already paid well if you were able to catch it. But that dip down to 135, if it comes, offers a much smaller risk trade. Trying to buy these earnings, or a few days, couple days after earnings lows, have to have the wider stop. However, still provides plenty of upside, $5-6 upside, $2 down, whereas the 135 give you that $6-7 upside, $1 down. So another one that is very, very tradable. Again, chart's kind of ugly. I'm not overly bullish on Google. I'm not overly bullish on most big tech right now. I think a lot of them have some potential push in them, but these ones that are trending down, your Googles and Apples, not sitting overly bullish on any of those. Really, the main tech I'm bullish on is Amazon. But Google offering kind of a potential nice dip buy. If we get back up to this trend 140, 139 area, I'm going to feel much more comfortable being short than long. Still sticking with that overall trend trade on Google, but printing some nice relatively inside candles, at least consolidation candles, should be giving us a pretty dang nice move here sooner than later. And so Google, one to have your eyes on, not anything to rush into, just kind of wait for some of those levels to hit. I don't think you're going to be missing a ton on it or anything, but wait for those levels to hit, maybe take the risk on the trade if you like it. Final one we're talking, AMD. Um, you know, uh, Only going to talk about it because of just basically this. I mean, this volume was insane. Had that really big volume previously and has now found itself in, not only new all-time high uncharted water, but when we go back and look at this previous all-time high, it was support for a month and a half. AMD consolidated. We talked all these levels and everything are from my last class. AMD consolidated for over a month for us to finally provide this really big move and has now ripped us over that 200 price. At this point, that should be everybody's line in the sand. 200 is where you want to base all of your trades around. Any pullbacks to 200, buy it, stop out below, and then you can kind of maybe, if this thing shows weakness, which it tends to really not, you can look for that gap fill to the downside. But AMD, this is of course not like, some intraday scalps. Of course, there's opportunities to short and stuff like that. I mean, I made money shorting AMD on this day. You can see that's where my trade was. I shorted it down through here. So there's intraday opportunities to have. However, AMD over 200 and you're short, you're wrong, in my opinion. So I just wanted to bring this one up because I know everybody trades it. So watch that 200 level. We were finding some nice support, 198 or yeah, 197. Sorry, I thought it was 198. Finding some nice support there. So you're really even risking it on the short below 200 to there, but we can see some quick selling. And the reason we can see quick selling is there has been, I mean, let's see, if we go to this daily candle, there has been 50 million total shares probably of AMD traded over $200. So there's very little liquidity pools up here, like we can see on a chart like this, there was obviously a ton of buyers at that 164 area on AMD. The market is now in price discovery mode. We don't know where there is a ton of buyers, or we don't know where there is a ton of sellers on AMD. So for now, you really have to play those intraday charts. You can use fibs. You can use, pre-market highs. You should use pre-market highs, pre-market lows, previous day high and lows, all of those things. And trade it around 200. I love those line in the sand trades. And AMD has given us a great one, and we know AMD is capable of making really, really nice moves. So it's something that if you're into volatility, if you're into, trading those big tech names, you'd be pretty crazy to not have your eyes on AMD going into this week. And so with that, that's all I got for today. I mean, we could talk, I got more, but I wanted to open it up to you guys. And of course, if you guys don't have anything, we can talk a couple others I'm watching, but I wanted to open it up to all of you, see what you're watching, pull up some charts, see if I agree or disagree, and let's see which one of us wins. Let's see what we got here. Yeah, T to the moon. Oh, Mara. Yeah, Mara. Things a mess right now. Oh yeah, you got that, Helme? That's the 5 and 13 that I like. Tesla, yeah, we might as well check it out. I mean, I think there's just a million better trades on the market. Like this is just, I mean, sure, it's offering scalps, same thing, trading around 200, I mean, it's offering scalps, but like, I don't know. I'm just not into this kind of movement. leave it to Shark. Shark caught the banger, of course. Like Shark gave out the 250%er, no surprise to anybody, but he was patient and he didn't rush into that trade and he took it on that dip to support and took the bounce on it. So, I mean, yeah, you can trade Tesla. I mean, look at it. It's offering just like basically just support bounces. I mean, you can buy it down here every time it touches 198.50, it looks like, and risk it long. And then if it breaks 200, you can also risk it long. But I just think like when this is going on, I mean, even like intraday, this type of stuff, that I don't know. That can just be annoying to trade on something like Tesla. Um, but you're right. I mean, tradable. Same as AMD was. You can buy those dips down to those levels. Trend is obviously still going up, so you don't want to be like focused on shorts as much as longs, but still like this thing's just slug life right now, and that's not. I trade Tesla for volatility, and when it doesn't provide that, like, you know, these are the times to trade Tesla. Moves like this, big moves up, big moves down. That's when Tesla's at its prime, where it's putting in those like $8 days day after day. When you're getting a bunch of $2, $3, $4 days on Tesla, it'll make you pull your hair out. So for me, I'm not loving it. I cannot deny that, like, I mean, very obviously in a range. Buy dips at 198, short it up here around 204, 205. And then if it breaks, sure, look to long it. Well, you only got a buck 50 to gap fill up there. And if it breaks this trend, look to short it back down to 192. So it is tradable, but Tesla's the best when it's moving, not when it's slugging. Oh yeah, that's exactly what you said too, Ricky. Range round, easy entry and stops. That is 100% correct. I can't deny that at all. Snow. I mean, after that earnings, who knows? Yeah, see, to me, no, don't even touch this thing. I mean, you can try the 180 dip buy if it comes. Um, the, I'm sure that Twitter is stuffed with people trying to catch this gap fill to the upside. Maybe it comes. But give this thing a few days. I mean, it just dropped 25% or whatever it was, 23% on the back of a new CEO and weak guidance, but not even bad guidance, just a little weaker than expected. This thing is going to have a mind of its own for the next few days, I bet you. This one kind of same thing. I mean, like ridiculous dump, ridiculous bounce. Now selling off. I mean, I would let this thing figure itself out a little bit more. I mean, if I was forced to trade it, I would just be trading these previous highs, see if this ends up setting the range for us. And then, I mean, that is nice of them to put 300 right in the middle. Yeah, a little something over here. I mean, if you want to trade it, but be ready for that. Like, it's going to be a tricky one because you can go from like printing money to blown out back to printing money real quick. So I would tread very lightly on this. See if we can get, I would start to feel more comfortable looking for those longs again down around 280, something like that. See if the market is ready to bounce us. See if this was just some big money getting themselves out. This is going to be a bit of volatility for a little bit for us when you have $100 gap on a chart, $110 gap on a chart, whatever it is. You're going to have unexpected movement all throughout this. So be very, very cautious there. KO. What's it doing around 60? I know it's got to be trading there, 59.53. I mean, yep, still doing the same thing. You want KO's great, love it, trade it pretty frequently. You just want to trade the ranges on this. You know, I don't like any entry around here. Sure, you have all this wicks and all this confusion here, so you can risk the long here, stops down here at 59. I would much just prefer wait for that dip to 59 to get long, or break of 60 to attempt to get long. But as we've seen, God, I mean, 20 something times at this point, it's not holding over 60 for nothing lately. So I really, have my most interest down here near these lows looking to get long. And then honestly, if it is breaking 60, pushing up to that 61, I'm going to feel substantially more comfortable short. It's just been unable to, make that thing happen. So shorts up high, longs down low is really going to be your best bet on KO. And just be real cautious trading around that 60. I know both me and 1K have been caught trying to get long over it a couple times recently, and it's not holding, it's not holding good enough for it. TSM, yeah, everybody's kind of got their eyes on that one. They got their, one of those last earnings left holdout. What do we got? The 18th. So a couple weeks out still. See, did it catch that breakout? It did hold that breakout. Looking pretty good. I'm sure that these contracts are already getting pretty juiced up on it. I mean, don't bet against chips, but obviously failed the overall what would have been that full-on breakout here. We can see though, if it wants to get above that 135.40 area and hold it, we can see if we want to get the pushing up there. Like you said, I mean, everything's running into, I'm assuming that's likely going to be all-time high over there. So I'd watch that. Already rejected almost exactly where it should. It's kind of what you should have expected with that. But we can see if we get that rally over the next couple weeks on these. I mean, I do expect a little more push in the market going into CPI, PPI before the earnings on this. So definitely one to have your eye on over 135 or have your eye on all the way back here, 130, 130, 131 area, something like that. To try to catch that bounce off of this trend. Like I said, a lot of time these first attempts, especially when it's only the second or well, third, touch on this trend, a lot of time those don't like to stick. So this could offer a real great bounce, especially if it wants to get running into ER. That's actually a kind of nice trade. I'm sure the contracts are getting expensive, but still somewhat affordable. Oh, that's dividend. When is their earnings? Oh, their earnings is over a month and a half out? How could that be? Let's see if anybody knows anything like that. Um, yeah, well, that's a dividend date. So I actually will sort of take back what I said because I wasn't paying enough attention to say that's dividend, not earnings. You do want to be cautious going into dividend dates. There will frequently be sells around there. Specifically after, see, we can even go back here. Sometimes you'll see a nice little run in. For all we know, this could be that run, and then you'll see some people taking that profit after that dividend date. So we'll see divvy date into potentially are here. I might be looking to buy that dip buy somewhere out here if we get a nice little sell after the dividend. Do I think the S no, the S no, SMCI won't make the S&P more volatile. Its market cap is tiny. I don't like the market cap on SMCI is like, I don't know, $50 billion. So it's not even like a drop in the bucket. No, I mean, no. I think it's funny that it was added, like, and I just love how like Wall Street Bets and Twitter are always wrong, and they were just like absolutely positive that PLTR was going to get in the S&P, and that made like no sense. But also, I'm surprised to see SMCI getting put in there. But 50 billion market cap, uh, Apple's is what, put 100 times bigger than that? Not quite. Let's see, maybe 80 times bigger than that. So no, I don't think it's gonna matter. It is not a big market cap. It has little to no available float. So I think it will likely have little to no effect being in the S&P. Just my opinion. But I can't see it like there's no reason for it to like move the market. When you got it at a 50 billion market cap and you have Microsoft at 3 trillion, Apple sitting around 3 trillion, Nvidia 3 trillion. I mean, it's SMCI is moving like it is due to a market inefficiency with insiders and institutions being locked into their shares. So there's a very small float available for trading. Depending where you look, it's somewhere between 7 and 10 million shares are available for trading. So when you see something on SMCI like, oh, 15 million volume, that was the entire, well, that was 1.5 times the whole available tradable float traded in a day. So the only reason it moves like it does is a few shares being traded is actually moving that price. Yeah, J-Dub, there you go. You answered it before me. Market cap is tiny compared to most other things. XLE, kind of touched on it earlier. Same thing with, talking Exxon, talking those oil names. A lot of consolidation on this chart always. I love to trade it because of that. These couple buck moves on XLE can pay really nice. However, a tempting breakout. If you're bullish on XLE, you want to see this 87.15 previous high get broken and push up 87.70, and then we can really get to moving on XLE. I'm not diving in long here. I think, we might be getting a little, we'll see if this ends up being a breakout that holds. The price action on it was, you know, offered the very nice bounce. We even talked this in voice chat on Friday or whatever. I missed this. Offered the very nice, bounce trade here. However, in the end, it ultimately shaved about 50% of its gains on the day into that close. So when we look at XLE, it did break out. However, those sellers showed up pretty good. So I'm personally not rushing into the long trade. Again, we get a pullback down here, this 86.75 area like we saw on Friday. It just offers a great risk reward long trade on it. Again, the type of thing you take an XLE contract from 86.70, you take some 87s and run those things 50 cents in the money. It's only a dollar move that's likely going to pay you 100% plus on the contract. So very, very tradable area, but I'm not rushing in long until we see some retrace to a place where I might actually, think we get bouncy. You don't, first breakouts rarely stick super good. So we kind of got to wait and see how this goes. I know the oil bears or oil bulls are coming out saying that a ripper's coming, but even seasonality speaking, not really the time to be like long oil. So we'll see what happens on that oil trade, the solar trade, and just kind of play it by ear. But for now, you want to either get long on a pullback or wait for this confirmed breakout to try to catch the longer trade. AVGO, man, you guys just asking the wild ones. I mean, what? I don't know what to tell. I honestly don't know what to tell you here. I mean, it ripped $100. I hope you were long, but don't chase it, That's the thing. We got earnings here in 3 days, 4 days. Is this just a big push into earnings? Are we going to sell all week? If you're trading AVGO this week, you are in gambling mode. And you are going to be gambling on some wildly expensive contracts. So be very, very cautious on this. I guess if you wanted to look for potential pullback levels, again, I'm going to say, your fib retracement really just from this low to this high, because it made $100 move in one day. These are some potential levels to look for pullbacks on, look for maybe bounce points on 50% retraces of that move, but regardless if you're trading AVGO this week, Broadcom is going to be an extremely volatile, extremely high risk trade. It's going to be one of those ones where people think they got it figured out just because the IV is working for them, but it's going to be a risky one. I haven't looked yet, but I'm willing to bet the priced in move is already just appalling on it. So you're going to want to be real careful. Yeah, they already have $106 move priced in on those contracts. So trading it this week is going to be very, very risky. PLTR, sure. It did basically exactly what everybody should have expected. Nobody should have been long up here at 25.50. Just no reason to be here. It had failed that breakout previously, so no reason to get long there. Now, part of in my opinion, part of PLTR putting in a 10% run in a week was a bunch of folks thinking that it was going to get put into the S&P when, I mean, the CEO has been saying that for a couple quarters now and it hasn't happened. So, I mean, there's no reason to think it was going to until it did. So now for me, offering a good trade, if we can get this breakout retest, I'll try to be long on it. But I would much rather look for a dip somewhere down to here to get long stops below it, and then ultimately try to short it back down. PLTR it's a hype mover. Like it does absolutely nothing like, just $2 range, which is big, 2, $3 range on this thing, for like weeks and weeks and weeks, and then something, oh, earnings, rip it, but really just consolidate it and consolidate it. So you want to trade PLTR around news, because otherwise you just get stuck in these like 50 cent or $1.50 chops, which make it very, very hard to make money and very, very hard to get follow through. Unless you're going, MMA's path and holding shares, then it's great, because you don't care about some of that just volatility. Otherwise, pretty hard one to trade. Big earnings beat, now getting a bunch of consolidation. I'm not rushing in long up here. We'd really have to go back to here. Yeah, I mean, I'm not rushing in long up here on PLTR personally, but that's just me. Uh, understand it, how to use AMD. Yeah, we can talk about fibs on AMD, just to show you. And it's actually going to be very, very similar to how I just showed them on AVGO. What I would look for, and there's going to be a bunch of ways to how you want to draw this, but this move, and let's see, do I have one of these that doesn't have anything on it, maybe? Okay, so this move, you could do this one of two ways. Well, really one of three ways. Because we had this very obvious consolidation here. So you could do um you could do a retrace going all the way from the bottom down here to the top. Um, you could do a retrace from the top of the range to here, which is going to, and this is going to give you your levels of where you're going to look for a pullback. So both very great ways to do it. How I actually drew mine, and some better fib traders might disagree with me. I actually drew it from this low. These are kind of That's the retraces that I would be looking for if we get below that 200. And the reason that I would look for that one is because this is where the breakout began. With the move from these lows up to here is the real breakout. So you can draw the fibs however you want. This is how I would personally be watching those fibs. Then on the other side, looking for the expansion upside. That one is again going to be kind of personal opinion of how you want to do it. And for me, since I'm never looking for just those ridiculously gigantic moves, I would basically just look for this move. This is going to be the high to low on that day. And so if we go into a shorter time frame, these are kind of be the levels that I would be watching, ultimately for AMD to go visit. Who knows if it's going to keep pushing? Who knows if it's going to pull back? I think you need to be prepared for both situations. But when you get into these uncharted territories, I think just running a fib extension on a smaller amount of data of, a whole breakout candle, things like that. Because you don't want to get too excessive, just to show another option. Because somebody actually sent me a chart similar to this. Somebody ran their extensions from this breakout all the way up to here, which those are good levels as well. I just didn't when oops when I started like looking at that, those just seemed like some I don't know why I won't pull it up for me. Those just seems like some excessively high targets when I started looking at it. Like, do we really think that the price target from 202 to 207 should that really be a $5 move just ripping above all-time high? I don't think so. So that's why I liked the condensed down ones a bit more. But again, million ways to do it. That's just how I would be viewing them. Yeah, market cap, that just tells you how big is a company actually, and SMCI not very big. SMCI, buy the rumor, sell the news. I would normally agree, but not really, because there technically was no rumor that it was going to be. I mean, Tilio is literally the only person I heard mention SMCI's got the nod for it. And so not really any news to sell. The news is that it is now in the S&P, and that's just sort of a fact now. I mean, of course you can short it, but no matter what, you're just gambling if you're trading that thing. QQQ, we already did that one. ARM. ARM is one that, like, I was talking about this with a friend last week. I would not short this company. Their financials are unbelievable. I would not be short here. This is like, I mean, it has put in a really, really nice move. I believe you're right that the IPO, like, is they're about to be able to sell some of those IPO shares. I don't know why they would. I'm sure there will be some profit taking, but ARM should be looked at as dip buy. They have a mountain of money. They're making a ton of money. They're spending like no money to make that money. So ARM is a really, really hard one for me to talk about. Oil. Oh yeah, people, I know. Everybody thinks that oil is gonna break out, but I don't. I mean, you the this is what I would basically be watching on oil, would basically be something like this. And we could get that push up here, but like another buck, $2, I would be shocked to see that push occur. For now, this is, this is should be watched. Obviously, previous highs to see if this is going to end up acting as support because it's attempting the breakout. But this isn't like super necessarily super bullish consolidation or anything. Big picture oil still, down pretty dang nice. But maybe we get that push up there, 81, 82. But for me, it's not, I mean, I'm not starting to look long here. Oh yeah. Even more so, I'm not looking long on those oil names here. I'm looking, and I don't long oil, but if you do want to long it, look for a retrace. Don't start trying to get long oil 80 or anything like that. And that's why I think XOM, XLE, all those could see a nice pullback to those breakout levels for sure. What about PLTR? You must have, you either, oh no, that was a little bit ago. I'm just behind. Yep, we did CL. Oh yeah, we're already 6 o'clock. If anybody's got to get out of here, thank you for being here. I really appreciate it. You guys are all the best. How do you do Fib retracement on TradingView? I have no idea. I can't stand TradingView personally. Nvidia. I mean, this one is funny. I'm happy that my chart still pulled up. Not like it pushed it up after, but we have, in my opinion, we have one level that matters on Nvidia right now, and that is all-time high. If we get above it and retest it, yeah, look to get long. Otherwise, I mean, I'm not saying short Nvidia, but maybe look for some little reject to get long on. Ooh, dividend date, couple of days too. Yeah, let's see what Nvidia does going into that dividend date. Nice little range on it though. Big range technically speaking, but very risky place to be getting long on it just yet. Obviously, if you're bullish on Nvidia, you hit your head, or bearish on Nvidia rather, you hit your head or something like that. You should just stay bullish on this thing. But let's see what it does. Previous all-time high. I mean, granted, we said it 5 days ago, so it's not like some long time in the past. But Nvidia right here, this is the main range that I care about currently. Put in another $60 moves in a few days, and let's see if we get that break, or let's see if we get the reject. Okay, well, that's through all the questions. Hopefully that was good. Uh, man, these ones are too, all this crypto stuff is too weird right now because see, we got this one running, not a miner, just a buyer and a holder. So, I mean, obviously that thing's going to run as long as this one, MicroStrategy is going to be one that continues to, the chart is going to behave a lot more like Bitcoin. Mara, Riot, these ones, we'll see. I mean, I do think Mara printed this real nice reversal candle. We'll see if it wants to do it for us. But I'm personally under the stance that we're going to see some rotation out of the miners. One, they're all about to take a huge hit next month. Production's cut in half overnight. That's just a fact. So they're all going to take a hit next month. As far as their money, I'm not going to say that's going to bring the stock down, nothing like that, but they're all going to take a hit next month. And then just forward looking, I'm starting to wonder if big money is going to focus much more on, those Bitcoin ETFs. In my opinion, they would be dumb to park money in miners when you have something that's directly tied to the asset. If you want an example of something like that, look at gold. Um, and gold, the metal can put in huge rallies and the miners don't follow. They might follow, but the move is better on gold than it is on gold miners. So I will not be surprised to see a lot of these mining names, your Maras, your Riots, your Clean Sparks, start to behave a bit more like the gold trade does, where you're going to be better off trading those ETFs that have direct ties to a Bitcoin holding. But I don't know nothing about crypto, so I could be wrong. But that's kind of what I personally expect to see. That's what would make sense, at least in my mind. And if I was big money, I know that I would be parking my money in, something directly tied to the asset. Because a miner, like we're kind of, I know a lot of people like Clean Spark, but man, you read between the lines on that company, and I just ain't buying it. Um, and yet it's rallying. Like I've been dead wrong. Like this thing is on. Uh, this thing was on an absolute tear, obviously getting smoked with a lot of the minor names right now. But this thing was on an absolute tear. And when I read that earnings report, I was like, whoa, dude, this guy is a con man. That's horrible. Like there's lies left and right in that thing. And then somehow the stock rallied, God, 200% or something off the back of those earnings, 150% off the back of those earnings. When I read that earnings report, in my mind, I was like, short this thing. That makes no sense. So I think the minor trade could be an interesting one. We might see some volatility in it, but I think ultimately down the line, there's no reason to be in a minor when you can be in Bitcoin and likely make more money. But that's just my opinion. I don't know shit about crypto, so I'm probably wrong. Okay, well, if that's gonna do it, everybody, thank you so much for being here. Appreciate y'all taking time out of your Saturday night to listen to me yammer. Some great trade ideas for everybody tonight. Good ideas from some of you. So thank you guys so much. Uh, really appreciate you being here. Yeah, mining has huge expenses. And that's like, yeah, I mean, that's like, Clean Spark. So they said, oh, we will double our hash rate over the next 2 years. And it was like, well, I hate to tell you guys, but next month, your productivity is getting cut in half. So I sure hope that you double it sooner than 2 years because you have to double it just to get back to where you are now. So that's. And as energy prices increase, we're going to see a ton, at least in my opinion, the less profitable miners and the less efficient miners, those all go offline next month because they don't make enough money to keep going. So we'll see. Yeah. Yeah, exactly. Hold gold, hold Bitcoin. I mean, both things that are great to be bearish on or bullish on long term. I'm not saying be bearish on those things, but like give me the asset, not the people mining the asset. Okay, awesome, everybody. Thank you so much. We will catch you all tomorrow, Monday. Watch out for ranges and have some fun. And we will talk to you then. Thank you. Yeah, thanks, Scotty. Have a good one.